TheoTrade. This is Don Kaufman. October 12th, 2022. Just about 15 minutes to go to the cash close here on this Wednesday afternoon. There's no surprise. S&Ps, for the most part, massively unchanged. But we've come right down to it. Listen, markets are just primed to explode higher, but also at significant risk for an outright crash. Most of this hinges on a critical catalyst tomorrow morning. Of course, I'm referencing CPI. Now, in this evening's video, we're not going to discuss a tremendous amount. What do we think about CPI? Doesn't matter what you think about CPI. Why do I say that? Because it matters what the marketplace is dictating to us in terms, of overall risk. You know, your feeling on CPI or an opinion on CPI is fine. But you just got to recognize you're coming into a completely binary announcement. It's, again, what I would term a catalyst. It's like throwing a match into a pool of gasoline. As I said a moment ago, this marketplace is absolutely primed to explode higher. Why do I say that? I mean, just go over to the spiders. Take a quick glance at the spiders. We've barely had an uptick since, roughly speaking, mid-August. I mean, it's just outright hideous. Sure, some three-day rallies in here that were brought to abrupt halts, of course, by the Fed. A few rallies here and there, but effectively straight down. And when you start looking this on a percentage basis, here, again, in mid-August, you're down about 10% on the spiders. They had rallied back up significantly, straight down about a 15% drop. One of the aspects that I want to bring to your attention, first and foremost, is that we absolutely are, in hideously oversold territory. I mean, for the most part, major indicators that you're going to look at, whether that's like an RSI, Laguerre polynomial, you can look at MACDs, stochastics. Again, we're in hideously oversold territory. I think I would agree with anybody and everybody that said we're primed for the quintessential rip your face off rally. On the other side of that, and again, I'm going to look with you in a moment at some very quantitative indicators. And I want you to understand markets, they don't crash from highs. Markets crash, from absolute horrendous lows. And it's precisely where we are positioned coming into this major binary announcement. With that, let's kind of get to work here on this evening's video. The first thing that I think I really want to, spend some time on is just the kind of risk that we're going to see in the markets over the next 2 days of trade. For that, we're going to cruise over to the mother of all products, the SPX. You got to look at the SPX. First of all, give yourself orientation. Where are we on the week? The entire week, and this is going back to last Friday's expiration, but the entire week, we were kind of anticipating about a $124 move. Where are we on the week? Well, the week roughly started at 36.40. We're trading, again, mildly lower. We're not even halfway home to the lower edge of the expected move. Lower edge of the expected move in this particular case is 35.15. However, at a point in time like this, again, how critical the catalyst is tomorrow, which of course, again, is CPI, right, cannot be overstated. And I'm going to tell you exactly why. Let's move away from this weekly expected move and cruise right into the trade tab and take a look first at tomorrow's expiration. I'm actually going to knock this down just about 12 strikes so I can zero in on it, all right, and give you a good feel. And I rarely do this when there's only 10 minutes left in a trading day, but I'm going to freeze the screen, and I want you guys to understand exactly why. Mark my words, that, people, that's big boy volatility. And this is for tomorrow. Forget about the fact that we have tomorrow to trade, Friday to trade. This is just for tomorrow. And I want you to zero in on the October 13th expiration. Okay. So the coolest thing now about the SPX is the SPX actually provides daily expirations. So you can get a good feel, good read on risk. Okay. Again, broken down to the most finite, expirations, which is day to day. And with this, you realize that you're looking at almost a 55 vol. By tomorrow morning, that volatility is going to go up quite considerably, not because the risk is growing, okay? The volatility is going to go up to offset time moving forward. And I can't stress this enough. The more important takeaway right now isn't the fact that we're like, look, it is a 55 vol. Like, I get it, it's 55 vol. If you were trading in a 55 VIX, you'd be like, oh, my hair's on fire. This is completely crazy. The 55 vol, yeah, it's high. It's for one trading session. What's even more impressive, you're in an $83 expected move for one day of trade. Okay. And that's why I say just put on your big boy pants, because this is where I say, you're primed to explode higher. You got to look, though, at the other side of this. It's the dark side of the force. Markets crash in situations like this. The timing couldn't be worse. Come on, it's mid-October. Everybody realizes that. A lot of people are looking for the quintessential rip your face off rally. But there's a confluence of different asset classes that are just primed absolutely perfectly for a horrendous market move. And again, I'm not going to sit here and preach to you about what I think CPI is going to be. Who cares? It doesn't matter what I think. It doesn't matter what anybody thinks. You don't have to tune in to any of the financial media. All you got to do is tune in an hour before the market opens tomorrow, and let's get ready to rumble, because markets are going to move big. How big? Well, $83. Now, it's a quick reminder for those of you that do not speak market geek. What that basically amounts to is what we call a probability, okay, of expiring. So it's looking for this $83 move higher or $83 move lower. But roughly speaking, you can actually have, all right, two times that expected move is what we term a probability of touching. So just, gather this if you want. That's be basically 80 times 2. You'd be looking at that point at 160 points higher or 160 points lower. That would actually be 2 standard deviations, okay? However, that's actually what we term a probability of touching. So for the most part, okay, you can see, again, a horrendous move higher or lower in tomorrow's trading session. And a lot of this is going to transpire, again, before the bell goes off. So I stress to you at this point in time, this is where you say, you just better have your risk in check. Like whatever your positions happen to be, I'm coming into it slightly negative delta. You can see I'm massively unchanged in a trading day. I am coming into this, again, slightly negative delta, but at the exact same time, I don't mind saying this, okay? By the time people listen to this, it's all over but the crying. I'm actually putting on a back spread, putting on a back spread in the QQQ. This is actually a bullish back spread in the QQQ. If the Qs start to explode higher, okay, I'm going to be gold, Jerry. I'm going to be gold. But if they crash, okay, and burn, I'm going to keep a very small credit. So that's one of the positions I put on expressly for, okay, this CPI number. In addition to it, I did a trade in the TLT. I thought to myself, the bonds, where are they trading right now? Basically, the TLT is trading right at $100. I've actually put on an out of the money, and I so rarely do this, an out of the money put spread. Why? Yeah, I kind of thought to myself, have you looked at the bonds lately? They're right at the lows. I mean, talk about shorting into a hole. This is shorting into a huge hole. I hate doing this. But I'll tell you what, if CPI comes in hot, we're going to drop like a rock. We're going to turn into what the United Kingdom is doing right now. The UK is actually in bond chaos, okay? That's their terminology, not mine. So you got to keep an eye on that as well. So those are 2 trades I have on. But moreover, I just want to reiterate a couple of quick points on this particular front. And this is what I want you to kind of, in terms of risk, you got to grab hold of the fact that the S&Ps, and again, there's kind of a confluence of events going on. The S&Ps are basically sitting at lows. Okay, they're sitting at lows. All right, so they could explode higher, they could come off lower. I think you get that. Okay, volatility. VIX is sitting at the 34 handle. Just to point out, you can go back to max chart here on the VIX. Not too often. You can count basically on two hands the number of times the VIX has actually been at this level. We don't ever sustain this level for a long period of time. We do not sustain a 34 VIX for a long period of time. We either explode higher, okay, or we collapse lower. There's just no in between, okay? So obviously S&Ps have come to kind of what? Yeah, that situation's come to a head. Volatility situation's come to a head. Have you looked at bonds? Because that's what I just brought up a moment ago. Bonds, they're basically sitting at lows. Dollar, okay, like 113. Sorry, this thing is primed to actually rip to the upside. You can even look at like VVIX. All of a sudden, the VVIX even came back to life today. All right, we're hitting what we call the VAMA zone. Every major risk indicator right now is pointing towards it's going to be huge risk. Listen, just game face on. Because I'm going to tell you right now, this one's binary. And I can't stress that terminology enough. Do not try to handicap what you think. Do not get caught, okay, looking for the rally or looking, okay, for the move down. Either direction is going to be a horrendous move. You get the rip your face off rally, hey, wonderful. You can ride it maybe throughout the course of the trading day. But a crash to the downside, you better not count it out. Again, I cannot stress enough. Know your risk, be comfortable with the risk. If you come in, all right, and you're watching this, I don't care if you're watching this 11 o'clock at night. You go look at your risk and you say, holy crap, I'm short 1,000 deltas. You can mitigate your risk. Overnight, you can trade S&P futures. You can trade S&P micros. Okay, you can mitigate. Remember that one S&P futures contract is the equivalency of 500 shares of the spiders. Okay, there are things you can do to mitigate your exposure. Know what your risk is. And again, nothing is more effective than explaining it than just look at my P&L in the day. Okay, here's a day where markets are going to finish for the most part, unchanged. All right. And that's why I reiterate, we are just primed to explode higher, but at risk for an outright horrendous crash. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.